Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Wednesday the 8th of April. There's been a slight retracement that we've seen in equity markets specifically, but risk appetite generally is taking a bit of a pullback. We saw Wall Street sharply unwinding earlier gains into the close. About 3% the S&P 500 gave up to actually close negative on the day. Not a great sign, that is. We've seen futures just slipping back a little bit today, nothing too decisive, but that sort of all adds up to a bit of a retracement move on European equities. We've seen the oil price falling sharply in the last couple of days, actually. That move is quite a considerable move, 29.15 down to $24. That's quite considerable. And it sort of comes ahead of this OPEC meeting that markets are not sure how to take at the moment. Obviously, the propensity for failure and disappointment is still pretty high, considering how volatile the two countries are with each other, Saudi and Russia specifically. But also this morning we've had the announcement that from the Eurogroup of Eurozone finance ministers that they haven't managed to come to an agreement with regards to a stimulus package. The issue of Corona bonds is going to continue to be a big factor. Italy reportedly pushing pretty hard for that to be included, and debt mutualisation is it's going to be a hangover, I think, for the Eurozone, and how they politically can get through this situation with their relationships intact is going to be very interesting, because certainly 2012 didn't do that well for relationships back then, and really did hit market sentiment through that period. So it's interesting to see how that develops in the coming days and weeks. But certainly, the slight element of euro underperformance there, nothing too significant, just a very marginal move. But broadly speaking, the dollar is strong, and that dollar has recovered some of its lost ground that it saw yesterday. It's actually outperforming across the major currencies on all these pairs. A little bit of a risk off move there, but nothing too significant. Gold continues to maintain support and hold ground, which is an interesting move, considering we saw that breakout, which pulled back to the breakout, and I'll talk about the technical implications of that in my analysis videos in a bit. But certainly gold looking positive still. Oil price slightly higher today, but in the context of a near 20% decline in the last couple of days, well, not especially significant yet. Still, that meeting tomorrow could be key. So, in terms of data points today, not a lot really. We've got the crude inventories from the EIA at 3:30 US time. 3:30 UK time, I should say. 9.3 million barrels. Again, after 13.8 million barrels last week, the inventory build is fairly significant at the moment. Look at this. That'd be 10 weeks in a row of inventory build, something like that. And last week we got the biggest inventory build that we'd seen since October 2016. So these oil inventories and lack of demand is really a key factor here. How OPEC Plus deals with that is going to be important. So that takes me on to my just before I go, the FOMC minutes for the 15th of March, I believe, is the minutes that are going to come out today. That was the meeting that was the unscheduled meeting where they cut rates by 100 basis points and then re-engaged $700 billion worth of QE. Since then, they've gone pretty much unlimited QE and done liquidity operations left, right, and centre. So it'll be interesting to see how much relevance the market gives to these meeting minutes tonight, but they could contain something interesting, so keep an eye out for those at 7 o'clock. So my chart of the day is the DAX. Now, we saw equities break out strongly to the upside on Tuesday. The DAX's breakout was, but a negative candlestick was the formation there. But what we've seen is this breakout 10,137. The breakout level is old resistance becomes supported. You've got a nice band of resistance, a nice band of support 10,097, which was Monday's high, up to 10,137. Nice little mini band of support there. But look at the momentum indicator, still positive, still going with this recovery. And it looks, despite the fact that we've just rolled over this morning as well, a slight pullback, it looks like a buying opportunity, doesn't it? Because you've got this uptrend intact, you've got the strength of the momentum indicators as well. Here we see on the hourly chart, we've sort of run through this area of consolidation now. And you can argue an upside break, which if you measure that target 9,337 up to 10,137, that's what, 800 pips of recovery. So you sort of project that towards not a million miles off 11,000 level. So the recovery from this breakout and continue to go looks to be towards that 11,000 mark in due course, but a little bit of a pullback as these momentum indicators on the hourly have just rolled over. And I still think it looks like a chance to buy it as long as that 9,337 line remains intact. I think weakness is a chance to buy on the DAX. You've got the support of the uptrend there around 9,7380 this morning, and as I said, that 9,337 level is key. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.